What's going on, guys? Welcome back to day 7 of the mentorship. So today we're going to be going over PO3 or AMD, right? Accumulation, manipulation, distribution. This is one of the most, I would say, popular concepts of, ICT, smart money concepts, stuff like that. So it's very important, and it happens almost every day, like very clearly, but I'm also going to explain how it's fractal and just the overall what it is, how you can use it, everything about it. All right, I don't want to overcomplicate it too much, hence why I want to keep it just within a 3-step kind of sequence here. And so without further ado, let's just fucking get into this shit. So day 7, boys, let's rock. What exactly is PO3 or AMD? Okay, so PO3, what it stands for basically is power of 3, right? It's 3 stages in price. And basically, accumulation, manipulation, distribution is what it is, right? So it refers to 3 main phases of price movement, okay? Accumulation, where a phase of liquidity builds up, typically in a range between a high and a low. It accumulates, goes up and down inside that range. And in order to actually trade it the right way, you want to wait for some sort of manipulation in the opposite direction of where you want price to go, right? So market makers accumulate positions, creating equal highs, equal lows, consolidation, stuff like that. And at that point, all you look for is a manipulation. So it's literally just 3 sequences, right? So a sharp move to grab liquidity, which is the manipulation, which is basically stop hunts, right? It takes people out of the market, which then goes in the other direction. Targeting orders above resistance or below support or whatever you want to call it, right? I just put this in here because, everyone knows what the fuck support and resistance is. So I just decided I might as well put it in there, okay? And then, of course, you have distribution, which is the 3rd and final phase. So the market moves directionally, often as a trending move after the manipulation phase, right? So you need to think of it in such a way that every candle is technically an AMD, because every candle has an opening price. Every candle manipulates in some sort of direction or another and then distributes, right? So if you see an accumulation, right, the body of the candle will open, right, shows where positions are accumulated. Then the wicks of the candle represent the liquidity grabs on both sides of the range. And then the candle, or the next, whatever the range that you're looking at, the candle closes in the direction that reveals the intended price direction after that manipulation. So this morning was a very clear representation of what we wanted to do of AMD. So we had the accumulation. I could even show you these sessions, right? So we had accumulation. You could look on like a 15-minute time frame. It's a bit more clear. So accumulation, right, between this low and this high, right, we accumulate. We manipulate outside of that range, right? And I'm talking about this range right here. It's very simple. This range right here. You see, we trade out of it. We manipulate outside of the range and then distribute lower. That's it. That's all it is. It's very simple. It's probably one of the most simple concepts there is. But yeah, every candle's an AMD, right? You might see a whole, chunk of price as accumulation, manipulation, distribution. But if you look at a candle in a sense of, okay, we open here. Let's say this is a bearish candle, right? So we open, right? You can look at this example right here. We open, we print the wick, right? So accumulation is the open, manipulation at the highs, and distribution. Every candle does the same thing, right? And that's exactly what I wrote here. Every candle, regardless of the time frame, can represent the AMD model, right? Accumulation, the body of the candle, open to close, shows where the positions were accumulated. The wicks of the candle represent liquidity grabs on both sides of the range. And then, of course, the candle closes in a direction that reveals the intended price direction after manipulation. I know I read that, but I just want to go over it again. So the fractal nature allows this AMD to be applied to literally any time frame, from the 1 minute, even the 1 second, to all the way to the end of time. You know what I mean? So how do you identify it? It's not that complicated. You can see it without even really understanding how to trade or without really any experience. You could see it in the chart, right? Just look at a high and a low, find a range, see where it breaks out of the range. That's your manipulation. Wait for it to start trading in the other direction. That's your distribution. It's that simple, right? But ideally, look for the range, right? Look for a consolidation phase. Oh my God. Look for a consolidation phase where price moves sideways, forming equal highs and lows, right? I don't know why I put that. It doesn't need to be equal highs. forming basically any sort of highs or lows, right? Because in this example, we just create a whole bunch of highs, but of course there are some equal highs and equal lows in here on different time frames. Identifying the range, obviously, right? Spot the liquidity grab or the stop hunt, which is the manipulation, right? Identify where price moves sharply to take out that said liquidity. It could be a wick above equal highs. It could be a wick above random fair value gap. It could be a wick above an opening price. It could be a wick above anything. As long as you see a clear manipulation, that's when you know you're ready to take the distribution. And be careful to not be the manipulation. Don't be the liquidity, because that happens a lot. I've been liquidity plenty of times, trust me. Everyone has been liquidity at some point in their life, and they still are. No one's perfect. I'm not perfect. You're not perfect. We still lose trades. It's just, now that I've been doing this for a long time, I don't lose as much. You know what I mean? So, but yeah, a wick above any high, wick below any low, right? So it doesn't always necessarily need to be like a crazy ass move. You know, it could still be like a little move, 5-10 points. Regardless, a manipulation is a manipulation, okay? Don't overthink it. It's literally just a range that's created. It sweeps the high to go short, or it sweeps the low to go long. That's literally it. Do not overcomplicate power of three, okay? Now, this move often aligns with the time of day, right? London Open, New York Open, when volatility increases, right? So you'll notice Asia accumulated, London accumulated, and then right as the pre-market was happening, before the open, we came up and actually manipulated the high before open. And then of course the open happened, and then we manipulated one more time. And then of course that sent us lower. You're not gonna have the same type of profile every single day. That would be really nice, but it's not gonna happen every day. You could see yesterday we accumulated, we started to expand during London, and then New York continued to expand, right? So we had accumulation, expansion, expansion. Right, you could even look here, right? Accumulation. Asia accumulated, London accumulated, New York expanded. And then you could even go back to different bar replays and see, okay, well look, we have accumulation, some more of a little bit of an accumulation, right? Manipulation at the highs, and then, you know, New York kind of just did its thing. The profiles change every single day. You just have to identify where price is, what the drawn liquidity is, and da-da-da. But the trade that we took today, or the price action that represented itself today, is probably the cleanest price action we've had in quite a long time. So yeah, you could even look here, right? Accumulation. We had the manipulation during London, and then we had the distribution during New York, right? So you could go back, you could back test, you could go back in the historical charts, you could look and see what everything does, right? Obviously we had an accumulation here, accumulation. I'm assuming we had some sort of S&T with London high, and then distribution, right? But of course, sometimes you're not going to be able to catch the manipulation during the New York session. Sometimes it's going to be continuation. Sometimes New York is going to accumulate. That all depends. And that's what I mean by you have to always see where price is and just be logical with where you think the drawn liquidity is. Again, react and don't be a dumbass and predict price. React off of your model and what you know works, right? So, yeah, that's pretty much that, right? Follow the expansion, which is the distribution, right? After the liquidity is taken, price moves directionally toward an inefficiency, right? A gap or imbalance or an order block. I don't know why I put institutional order block. Watch for a clean break of structure to confirm the distribution phase. And what I mean by that is just wait for displacement. It doesn't always have to be a break of structure. Okay, that's pretty beginner-like. Just wait for displacement in said direction, right? If you look on the 1 minute time frame, what happens here? Right, we manipulate the highs, we get displacement, right? We retrace as the fake out with an S&T, and then boom, trade's lower. It's that simple, right? Always be cautious, always understand what you're looking at, where the manipulation is, what the accumulation is, where the distribution may be, right? Be cautious, understand what you need to do, okay? So there really isn't much else in terms of figuring out what PO3 is. Again, it's really simple. You just look for the accumulation, wait for the manipulation to either side of the market, and then trade the distribution in the opposite direction of wherever the manipulation took place, right? So again, if we manipulate the highs, you want to look for the distribution short. If we manipulate the lows, you want to look for the distribution higher. That's literally it. So yeah, I'm just gonna leave it there for day 7. I'm gonna keep it short, guys. But yeah, if you guys enjoyed, please go ahead and leave a like on the video. If you haven't already, subscribe to the YouTube channel, and go ahead and watch the other videos if you haven't, because there's 6 days. Very informative videos. I would definitely go and check those out. And yeah, go ahead and join the free Discord as well. I'm going to be doing some stuff in there, live trade occasionally. I don't really like to live trade that much because I don't like the idea of sitting on the chart with a whole bunch of people just waiting for a signal to be sent out. That's not what I want to do. I don't want to just give signals out, you know what I mean? And although, I could charge for it, I could make money off of it, I could, charge the Discord $100 a month. That is probably something I might do in the future, but that's not how people should learn, bro. So, I'll live trade eventually. I just want to get enough people in there to build a community and just have people that are like-minded and have people talk to each other and understand, what we can do with each other and have some ideas, take ideas off each other and whatnot. But yeah, enough of this. I'm getting really tired. I can't even think right now, but yeah, apologies for the late delay. It's 10:17 Eastern time. Pretty sure everyone's asleep by now. It's 7:17 in California, but that's besides the point. I'll leave you boys with that. I'll catch you boys tomorrow for the fake NFP day or whatever the hell. I know NFP is on Friday, but yeah, it is what it is. All right, boys. Have a good one. Peace.